Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because we're gearing up for some major volatility from Bitcoin next week as it tries to hold above this pivotal 20-week moving average and confirm a higher low. And this is also coinciding with the US dollar index finally approaching some resistance here and facing all of those major moving averages that we were expecting to act as resistance once the US dollar index got that bounce, and perhaps it can roll over back into the risk on region. And the reason why the 20-week moving average is so pivotal here is if we're able to hold it and confirm a higher low, the shortened cycle scenario where Bitcoin breaks higher sooner becomes a lot more likely. However, if we break through it, it's unlikely we'll be able to hold the 50-week, and it's likely that Bitcoin has to revisit some lower prices before we can actually rally higher. And the backdrop for Bitcoin is there. We do have full-blown price discovery on the S&P 500 as it keeps pushing to new all-time highs. So at least we don't have stocks dragging Bitcoin down. And that inverse correlation between Bitcoin and the US dollar index has been very clear over the past few weeks. Ever since the US dollar index got that strong bounce, Bitcoin has rolled over, and we know that we're going to need a large drop from the US dollar index for Bitcoin to really enter any type of major mania phase, and that's also what has resulted in those major alt seasons as well. So we need to see the US dollar index roll over and play ball here if Bitcoin is going to enter into some incredible breakout to the upside. And if we check in with the main driver of the US dollar index, the monetary policy coming from the Federal Reserve, we can see that not much has changed in terms of rate cut expectations. We're still expecting 25 basis points every single meeting over the next 5 meetings, but we got some very pivotal economic data, which is having a huge impact on whether or not the Fed is going to be able to go back to QE as soon as the market would hope. On Thursday, the market was expecting core CPI to remain flat at 3.2%. This is CPI excluding food and energy since they tend to be a lot more volatile, but instead we ended up seeing an uptick in core CPI, and one monthly print is not a huge concern. We just don't want to see this trend continue, and ideally, if the Fed is going to have the room to really cut rates aggressively and go back to QE, we'd want to see core CPI roll over here, and that's why we monitor the inflation data so closely. Now, at first, the CPI data really spooked markets, but on the same day, we ended up getting a pretty concerning initial jobless claims number coming in at 258,000, which is quite close to our cycle highs from July of 2023. And about a 30,000 jump from the previous print just 1 week prior, and this further solidifies the fact that the Fed may have been right in cutting by 50 basis points in September, and perhaps the labor market is weakening. And just like what I said with the inflation data, one print is not enough to signify a new trend, but if we do see initial jobless claims trend higher here, then we could see the Fed cut rates more aggressively and perhaps go back to QE sooner. So we'll continue monitoring the inflation data and the labor market data quite closely, especially because we get an update to initial jobless claims each and every week on Thursdays. And the reason why the inflation and labor market data is so important is because the Fed can't go back to QE if inflation is elevated, and they would be able to step in with QE a lot sooner, which has a huge impact on global liquidity if we saw inflation cool off more quickly and gave the Fed that space to go back to QE. And we've seen what's happened in previous cycles when the Fed cuts rates but doesn't do QE because of the lagging effects of Fed rate cuts. They usually don't impact the economy and the market quick enough to stop the recession from happening. So we really want to see the Fed be able to do QE alongside those rate cuts to free up global liquidity, which is also what loosens financial conditions and sends risk assets like Bitcoin higher. So for now, we'll continue monitoring global liquidity. Right now, it is still going lower, and this doesn't mean Bitcoin can't go slightly higher. It just means Bitcoin can't likely go into a huge rally like the mania phases we've seen in previous cycles, because Bitcoin likely needs an uptick in global liquidity to do so. And regardless of the direction, we're still expecting a huge move from Bitcoin in Q4 because that's what we've seen from Bitcoin each and every Q4. We're still trying to figure out if it's going to be to the upside or to the downside. And that's why we always have a couple of different cycle scenarios mapped out. If it's going to be one of these green up scenarios we've seen in Q4 for Bitcoin historically, that's going to be more akin to what we have mapped out here in white with the shortened cycle scenario. But if it ends up being a red Q4 where we see October go higher, but then a huge drop in November, like we saw in 2018, 2019, 2021 and 2022, then that would be more akin to the normal cycle scenario where we come down and retest some major support at the 200-week and 100-week moving averages, but also at our ETF launch consolidation range that we spent about 2 to 3 months consolidating at before Bitcoin had that huge breakout higher to the March peak, and retesting that area as strong support. And Bitcoin's reaction at that level is how we're going to differentiate whether it's a normal cycle scenario or if it's a failed cycle where Bitcoin ends up breaking lower. Again, I think the failed cycle scenario is very unlikely, but because there's always a small percent chance of something like that happening, I want to keep it on here for accountability, just as a reminder of what's possible, even if it's very unlikely. And I know a lot of people get offended that I only have Bitcoin going up to 90,000 in the shortened cycle scenario. That's just because I don't see Bitcoin going that much higher than that if we don't have QE backing us up. And we also have a lot of interesting events pointing to Q1 to Q2 2025. We know that's when the Bitcoin ETF options are expected to go live. So I could see a scenario where Bitcoin rallies higher, everybody piles into Bitcoin and buys call options as Bitcoin breaks out in Q1 of 2025. Then those options go live, market makers are able to sell a ton of supply and buy puts on Bitcoin and benefit significantly from the downside, and Bitcoin ends up not being able to handle that sell pressure because many people are going to be front running the major round number of 100K that we've been talking about ever since I joined this space about 7 years ago. And perhaps that could also coincide with FTX users getting back their bankruptcy funds when that gets returned to those accounts in Q1 or Q2 of 2025. But again, we'll get more clarity on these things when they get closer. Right now, Q1 2025 is still a ways away, and a lot can happen between now and then, like all of the uncertainty and volatility we're likely to see as we approach the election deadline in just 24 days. And I don't think this election matters for Bitcoin in the long term. I still think that both parties are going to print money aggressively and are going to send risk assets higher, but there is going to be a lot of volatility leading up to the election and perhaps even in the week or two after it. And we see this being priced into the volatility index, which represents the volatility that the market is pricing in over the next 30 days. But most of those things are short-term concerns. In the medium term, we still expect things like the S&P 500 to trend higher. We're seeing really interesting survey data where crypto is second only to equities, and for millennial investors, it tops the list in terms of ETFs that investors are most interested in. And I think this trend will only increase in the long term. But in the short term, there can always be volatility. There can always be shakeouts. Whenever Bitcoin sells off, everybody starts panicking, saying it's all over. As soon as we see a bit of a bounce, everybody starts saying we're so back and did you fall for the pullback? And it's just sentiment. People have definitely been very frustrated with the volatility and chop, and people are getting very, very anxious as to what Bitcoin's next move is going to be, because there is a lot of uncertainty out there surrounding what Bitcoin's next major move will be. But for me, in terms of simplifying it in the short term, as long as Bitcoin doesn't close a weekly candle below 61.5K, there's nothing to worry about immediately. And ideally, we see Bitcoin hold above its 20-week moving average, so we don't even have to find out whether or not it's going to be able to hold the 50-week. And again, it's definitely a possibility that Bitcoin revisits the 200 and 100-week moving average in the low 40,000s price range. Although it's possible, I still think it's unlikely based on the current price structure and based on the price action and accumulation we've seen over the past few months. But as I'm sure all of you that have been involved in this market for a while know, anything is possible with this asset class. So we always have to be open to those various outcomes. But if we want to simplify it and focus on the long term, in my opinion, anything between 70 and 50K is fair value and isn't an exciting region for me to buy or change anything about my portfolio. And when we finally close above 70,000 or close below 50,000, we can finally again start talking about strategy, buying, taking profits, rotating, whatever that ends up being. But I mean, Bitcoin feels like it's been at 60K for years and years and years now. And it's crazy that anybody who bought Bitcoin in this price range in 2021 has been flat about 3 years later, which isn't really something we've seen from Bitcoin historically. But as long as we're in this fair value range, we're definitely going to watch the market closely and be prepared for the different things that may be occurring. But there aren't really many actions to take for those of us that are more long-term oriented with our investment strategies. So we'll keep an eye on economic data going forward. CPI is still trending in the right direction, but it is starting to slow down here, and we really don't want to see it reverse the same way we've seen core CPI reverse. We'll continue to use Trueflation as our leading indicator. As long as it's below 3%, I don't have any major concerns with inflation quite yet, but it has been trending upward ever since the Federal Reserve did that 50 basis point rate cut. So we'll continue to monitor this, and we can talk about potential risks once it gets above 3%. As for the unemployment rate, it did go down for 2 months in a row, but we have to continue monitoring it because it can still reverse and break out higher, and it is still trending to the upside, and that's why we monitor initial jobless claims so closely. We only get an update to the unemployment rate once a month, but we do get updates to the initial jobless claims each and every Thursday, and as of right now, it is trending in the wrong direction. So hopefully it doesn't break higher, and hopefully after that one data print, it can roll over here and go lower, but the only way to find out is by monitoring it week after week. As for continuing jobless claims, still right around its cycle highs and still well below its recession start average, but we'll continue monitoring that one closely as well. GDP is still quite positive, above 3%, like it has been for quite a while now, but this one is a little bit less useful to monitor than inflation and the labor market, because as long as the federal government is running these huge deficits to keep GDP positive, it's going to be quite lagging, and it's not going to give us that much insight and clarity towards the current state of the economy. It's more lagging, and by the time they revise it lower, if we do enter a recession, it's already going to be too late. So I like to actually monitor what's happening with the national deficit and what the federal government is doing, because the trend of the US government debt going parabolic has been going on for decades now, and it's only a matter of time before that debt gets monetized and we see that increase in the money supply, which is what increases the value of risk assets like the S&P 500 over the past few decades. And it's also why Bitcoin is likely going to perform very well in the longer term, because of its fixed supply and its other properties that make it so good as a fiat currency debasement hedge. But as always, let me know what you expect. We're going to find out very soon whether Bitcoin is actually going to put in this higher low and grind higher here and finally break out, or if we're going to lose the 20-week moving average once again, see how it goes at the 50-week, and whether or not we're going to come down and get that retest of the 200 and 100-week moving averages. But as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.